Ladies and gentlemen, welcome back to the channel. At the time of recording this video, Tesla stock is up 2.9% today. Look at the S&P. The S&P is technically red today by 3 cents. Tesla up almost 3%. Look at big tech stocks. Meta is red today. Microsoft is red today. Nvidia is red today. Amazon is up a measly 0.5%. Google up almost 1%. And Apple's up a 0.5%. Tesla is like 6x outperforming Apple and Amazon today. There is some news. I will share all of it with you in this video, but I wanted to start with the massive outperformance that Tesla is showing today, because I made a video yesterday that was titled Tesla stock is about to explode, and I think this is just the start. I think you could get a moderate rally, a kind of mild rally heading into earnings, but after earnings is really when you're going to see this explosion of Tesla stock, in my view. I personally think the stock could be up over 20% following like the next day after earnings. I believe Wall Street is completely asleep at the wheel in terms of what Tesla is doing with Robotaxi. Now, I did make a trade on Tesla stock in the trading community. If you guys want to see the shorter term trade that I made on Tesla, check out that link down below in the description of this video. But we have a lot of work to do. Hit that like button and subscribe to the channel if you have not done so already. And let's get started. Okay, so here are the top 7 voted questions by investors so far for Tesla's Q2 earnings call next week. Number 1, and Tesla usually answers the first couple of them. It says, can you give us some insight how robotaxis have been performing so far and what rate you expect to expand in terms of vehicles, geofence, cities, and supervisors? So basically, you got a robotaxi like guidance question here, first things first. Number 2, what are the key technical and regulatory hurdles still remaining for unsupervised FSD to be available for personal use, and what is the timeline? Number 3, what specific factory tasks is Optimus currently performing, and what is the expected timeline for scaling production to enable external sales? That's a big question too. How does Tesla envision Optimus contributing to revenue in the next 2 to 3 years? What a question. That could be a big one. Number 4, can you provide an update on the development and production timeline for Tesla's more affordable models? How will these models balance cost reduction and profitability? And what impact do you expect on demand in the current economic climate? Number 5, have any meaningful Optimus milestones changed for this year or next? And will thousands of Optimus be performing tasks in Tesla factories by year end? So these are probably the questions that will be answered. They may answer number 6 here as well. It says, when do you anticipate customer vehicles to receive unsupervised FSD? And number 7, are there any news for Hardware 3 users getting retrofits or upgrades? Will they get Hardware 4 or some future version of Hardware 5? They'll probably answer all of these, but the first couple of them are huge. I mean, that's what it's all about when it comes to Tesla earnings, is robotaxi guidance. And that's why I think Tesla stock is going to really explode, because Wall Street, they don't even really care about robotaxi at this point. Elon Musk said back in May that we could have hundreds of thousands of robotaxis out on the road next year. And I mean, if we get that same kind of comment now that we've actually launched the Robotaxi network, you have to model that to some degree. If you are an analyst, if you are a hedge fund or institution, you have to at least, discount it even like 90%, right? If Elon says we could have 100,000 robotaxis out on the road and it gets discounted 90%, that's still 10,000 robotaxis. I think the stock is priced for like 300 robotaxis out on the road next year. And that is why I really think earnings is going to be such a big upside catalyst for Tesla stock. Keep in mind, none of the metrics that other companies react to matter much for Tesla. EPS, margin, that's not what moves Tesla, because Tesla is a growth vehicle. It's all about the future. And the future next year, I think, is bright when it comes to Robotaxi. Tesla has just introduced a bunch of new promotions for new orders of the Model 3, Model Y, and Cybertruck in the US. Here's everything that's new. The Model 3 0% APR for up to 60 months is available with the purchase of FSD. 2.49% APR without the purchase of FSD. 1 free upgrade on eligible new deliveries, only for limited on-site inventory while supplies last, and 18 months of free supercharging for cash purchases only. Model Y, 1 free upgrade on eligible new inventory, only for limited on-site inventory while supplies last. The price shown on inventory already deducts the cost of the free option. 3.49% APR on loan terms up to 60 months, and a lease as low as $349 a month. The Cybertruck, free 20-inch Cyber wheel upgrade with all-terrain tires, a $3,500 value, available for inventory lease orders only. Now, quote, a vision expert at a rival autonomous vehicle startup said, annoyingly, Elon is right about the pros and cons of using sensor fusion, camera plus radar plus LiDAR, versus Tesla's vision-only camera-based approach for its Robotaxi fleet, according to Morgan Stanley's Adam Jonas. Adam believes investors may be overlooking the potential benefits of Tesla's minimalist sensor approach, intentionally leaving out LiDAR to push the fleet towards a fundamentally different and more scalable way of learning. So Adam Jonas today is saying, hey, some experts in this field are saying Tesla's approach is right, and it's going to lead to much faster scaling of the Robotaxi network. I think this is why Tesla stock is actually green today and outperforming so much. It's the first sign that, from anyone on Wall Street that's like, hey, Tesla may be able to scale really fast here. I think, the real fireworks is going to be on Tesla earnings, but this is like a heads up to what's going to be coming. Also in the news today, the head of Tesla Australia, Tham Drew, says there are no regulatory blockers to releasing FSD supervised in Australia. He says, quote, we are running through the final stages of validation prior to public release, looking to start with hardware 4 on certain vehicles and then release in phases from there. This is also exciting. Tesla is texting some people in the US that signed up on the company's Robotaxi interest page about upgrading to a new Tesla vehicle in, quote, preparation for Robotaxi. So what this looks like to me is Tesla obviously pushing people to get a new vehicle. But the idea is that, hey, if you want to get a new Tesla, now's a good time, because once we launch the Robotaxi network to other Tesla vehicles, not just Tesla owned and operated vehicles, you're going to be able to participate with a new Tesla. That is interesting, because in my view, that's the only way Tesla does get to really high numbers of Robotaxis out on the road next year, is, getting the regulatory approval, and then allowing customers that have bought FSD, that have hardware 4, to turn on their vehicles and operate their vehicles on the Robotaxi network. There's going to be some nuances there, right? Like you're going to be responsible for keeping your vehicle clean, things like that. But that is the way that we really scale. And what do you think is going to happen on Tesla's earnings when Elon says, yep, by mid-year next year, we are going to open up the Robotaxi network to individual Teslas. So anyone that owns a Tesla can sign their vehicle up for the Robotaxi network and start making money on the platform. And I'm sure it's going to be coupled with, Elon suggesting dozens of cities could be eligible, something like that. That is going to cause a major rally in Tesla stock. No doubt in my mind about it. Now, Tesla said in a letter to the Trump administration officials in February that it had already agreed to buy graphite from U.S. suppliers, but they have not yet shown the technical ability to produce commercial quantities of battery-grade graphite at the quality and purity required by Tesla and other battery cell manufacturers. Yesterday, the U.S. Commerce Department imposed preliminary anti-dumping duties of 93.5% on Chinese imports of graphite after concluding the materials had been unfairly subsidized. Quote, graphite accounts for less than 8% of the cost of a battery, according to Panasonic, but batteries are the most expensive components in an electric car. Doubling the cost of graphite could easily add $1,000 or more to the price of a battery. So it kind of sounds like until the US has graphite production that is sufficient for electric vehicles, this may be kind of curtailed. That's at least what it sounds like to me. And here you can see today on June 6th in Palo Alto, a Waymo was literally driving on the opposite side of the road. But again, if this happened to a Tesla Robotaxi, there would be thousands of articles written on it. But it happened to Waymo, so mainstream media just really didn't seem to care. There was also this article posted today on Benzinga that says Elon Musk attacks Trump for calling Jeffrey Epstein case, quote, a hoax, then defends him against birthday letter leak. Apparently, this is the post that Elon made. He can't believe, he before realizing it was all a hoax. And then Elon Musk asked Grok, is the letter most likely fake or true? And Grok says most likely fake. The letter's cryptic third-party script doesn't match Trump's direct style or known handwriting. He uses Sharpie notes. No photo for signature verification, and allies confirm it's uncharacteristic. Wall Street Journal claims DOJ review, but timing amid Epstein file. So seen as, Elon not being as aggressive towards Trump, that could also be contributing to a little bit of upside momentum for Tesla stock today. Now, in option activity today from hedge funds and institutions, you do have 53 different trades totaling $40.83 million with a positive order value of 90%. So hedge funds and institutions are very, what seems like, positive on Tesla stock today. The call volume, including retail, hedge funds, institutions, algorithms, all of that, 62.34% calls and 37.66% puts. So it looks pretty good on an overall basis and from just hedge funds and institutions. Here on the day today, you have 120,000 shares on net that are being covered on, 2.8% short interest of free float, $25.08 billion sold short in Tesla, totaling 78.52 million shares. Now, before we get into the rest of the information that we need to talk about in this video, I do just want to give a quick shout out to the trading community and give you a rundown of what we are doing over there. If you are interested, check it out. Link down below in the description of this video. But what we are doing is something that nobody else is doing. From my understanding, nobody else has ever done before. And that is, we are going out and finding small cap stocks with value that Wall Street does not know about yet, okay? I've been doing this personally for the last year or two. I've found that this is a winning strategy, okay? It takes a lot of work. It takes a lot of time, okay? You got to be a real nerd to do this, right? But even in the last 12 months, for myself personally, I bought IONQ at $7. Today it's in the 40s. I bought Novartis Semiconductor before the partnership with NVIDIA at $2. Today the stock's $8. I bought Applied Digital at $3. Today the stock is $12. I bought Nebius at $17. Today the stock is in the mid 50s. Okay. I even bought HIMS at, $17, $20 in that range. The stock obviously went up to the 70s. So we're finding these smaller cap companies, finding the value that Wall Street is missing and just waiting. That's all you have to do. Once you find a good opportunity, is wait for Wall Street to figure it out. Wall Street will figure it out eventually. And some of the opportunities that we are finding in core themes for the next decade, like AI, energy related to AI, robotics, all of the biopharma, some of these opportunities are incredible. Like I can't believe we're still finding these kind of opportunities. I put out my due diligence. I share my positions, how big I am in a certain stock or what the thesis is. And these trades are really with like a 12, 24, 36 month time horizon. I don't have like a hard stop on these. They're not just a month. They're also not 10 years, right? They're kind of a medium term outlook, and we're going for 10, 20, 30, 40, 50x stocks. And really, by definition, if I don't think a stock is like a 10x opportunity, then I'm really not investing in it, because I think there is so many 10 plus x opportunities that I'm not going to waste my time with a stock I think can double in the next 2 years. I know it sounds crazy, but with this strategy, you know, it's unique, right? And that is what we are doing, to say the least. Check out that link down below in the description of this video. I do make a lot of earnings trades as well, so if that is something you are interested in, again, link down below in the description of this video. But with that said, back to the episode. Now, in the news today, we did get building permits that came in at 1.397 million, pretty much in line with estimates. Housing starts that came in at 1.32 million, better than the expected 1.30 million. Wall Street doesn't care about that all too much. Housing starts month over month came in at positive 4.6%. Last month was negative 9.7%, and the forecast was positive 2.7%. So again, Wall Street doesn't really care about that. Michigan consumer sentiment came in today, and here's what's fascinating. There's only like 200 people that run this survey, like respondents to this survey. So it's statistically, like it should be statistically unimportant, but Wall Street cares about it. Okay, so the headline number came in at 61.8. The estimate was 61.5, and last month was 60.7. So it came in better than expected on the headline number. 5-year inflation expectations were expected to hold steady at 4%. They came in at 3.6%. So much better than expected. Consumer expectations came in at 58.6. The estimate was 55, so that was much better than expected. Current conditions came in at 66.8. The expectation was 63.9, so that was much better than expected. And 1 year ahead inflation expectations were last month at 5%. They were expected to fall to 4.7%. They actually fell to 4.4%. So, you know, better than expected, you know, current conditions and consumer expectations mixed with lower than expected 5-year and 1 year inflation expectations. And yeah, I'm not surprised that a lot of small caps today are absolutely ripping higher. Like, this trading community portfolio is now up 76.74% year to date, having another monster day today. Now, American Express reported earnings today alongside companies like Huntington and 3M, but American Express is one of those companies you want to pay attention to always when it comes to earnings, when it comes to the economy. Like, this is going to give you a much better understanding of how the economy is actually doing, kind of like Walmart, right? Forget the economic data that comes out from the government. Listen to what Walmart says. Listen to what American Express says. Listen to what other credit card companies say. Okay, that gives you a lot more insight to what's actually happening in the economy. Now, American Express earnings show healthy spending, including on these fancy categories. Amex saw 7% growth in spending last quarter. Spending on front of cabin plane tickets and high value lodging transactions was up even more than that. So, I mean, they had good earnings. It says overall spending growth showed remarkable resilience, he added. And Amex added 3.1 million new cards to its franchise in the quarter. Revenue, meanwhile, grew 9% to $17.9 billion, topping the FactSet consensus of $17.7 billion. Amex recorded earnings per share of $4.08, down 2% from a year before, though the company said the EPS would have been up 17% when backing out a 66-cent per share gain from a sale of part of the business, which was factored into the prior year's EPS figure. So, yeah, spending looks fine. Doesn't look like we have any kind of recession on the horizon, at least for now. And we can all say, yes, people spending credit on credit cards is not exactly great, but it's spending. That's what matters. Now, Donald Trump is pushing for a 15 to 20% minimum tariff on all EU goods. Fed Waller says, if the president asked me to do the Fed chair job, I'd say yes. Fed Goolsbee says that rates can go down a fair bit over the next year. Fed Daily said last night that 2 rate cuts this year is reasonable, and that is what the markets are roughly pricing in. Fed Goolsbee says, I'm a little wary as the latest CPI data shows tariffs pushing up goods inflation. House China Panel Chair Molinar faults Trump's move to ease NVIDIA chip sales, seeks Commerce Department briefing by August 8th. Again, the idea here is if NVIDIA doesn't compete in the Chinese market, then Huawei or Huawei, I think is how you actually say it, is going to dominate the entire market. Like, you lose. You don't let NVIDIA compete, then you lose the market. If you do let NVIDIA compete, then you're letting China compete with the US for AI. Like, it's a lose-lose. I mean, there's no, I guess, easy answer. The only thing we have to do, if you're in America, if you want to win the AI Cold War, which this most definitely is innovate. Create new products, create better products at cheaper prices, and foster more mainstream adoption. One of the reasons I'm so bullish on this market, among other things, like, I'm not going to say this is the only reason I'm bullish. I'm bullish on a lot of things, but it is the AI Cold War. All big bull markets happen because of a new innovation cycle, like the internet, right? Massive bull market that has really led us up until where we are today. This time it's AI, and Cold Wars really just mean competition. Okay, as long as the geopolitical tensions are not too high, as long as there is not an actual war, a Cold War is great for innovation. It forces companies and countries to innovate rapidly, okay, so they don't lose to the other guy. That is what is going on right now. And it's almost like we have an internal AI war going on between companies trying to outbeat the next company. But then we have this Cold War going on with China, a whole separate country. And that is going to drive this market substantially higher in the years to come, because AI is going to get bigger, better, faster, more adoption, adopt or die, essentially. And yeah, that is very bullish for your portfolios. And that is where specifically I see a lot of opportunity in some of the smaller cap AI names. Like, this is a revolution, something in which you have not seen since the dawn of the internet days. We're back. We are so back. And apparently today it's being reported that Trump's appointees requested more marble for the Fed renovation. So potentially why it was running over budget could have to do with that, which kind of eases some of the pressure maybe on Powell potentially getting fired. U.S. Department Treasury Secretary Falkender says one should question why interest rates are so high. And he says the U.S. Treasury wants Trump to cast a wide net for the next Fed pick. He also says that crypto rules further cement the dollar as the standard. The IMF, that stands for International Monetary Fund, says we have seen strong evidence of front-loading ahead of tariff increases and some trade diversion. The IMF on inflation says cooling demand and falling energy prices point to a continued decline, albeit with variation across nations. The IMF says since April, economic indicators reflect a complex backdrop shaped by trade tensions. And the E3 and Iranian diplomats are expected to meet in Europe next week to negotiate some kind of nuclear deal, or at least set the framework for that. And the Fed says the economy has rebounded from trade war lows. The Atlanta Fed GDP Now index is unchanged on the day today, despite having economic data. That's actually a good sign. The Q2 GDP numbers are running at 2.37%. Fed Waller said, I'm not seeing longer-term inflation expectations go up. Fed Waller says, I want to make sure we don't have a hard landing. Fed Waller says some of the cost of tariffs will be passed along to consumers, but not in a way that causes persistent inflation. Yes, finally, somebody gets it, okay? Inflation is only ever a monetary phenomena. Of course, could we see a one-time price increase from tariffs? Sure. If we get this staggered approach where we don't get everything all at once, like trade deals just come and another one comes and another one comes, that could make it a little more bumpy in terms of some of the inflation reports. But tariffs are not going to cause like a 2022 style multi-year inflation spike, right? Where like inflation is a major problem. That only ever happens from excess money supply. Like when you send out stimulus checks, you're always going to get inflation. Always. Okay? When you tariff things, that's not inflationary. That is, by definition, deflationary, a tax, but it's going to cause weakening in the economy more than anything else. Fed Waller says, I want to look at 3-month and 6-month inflation for tariffs. Fed Waller says it is probably not critical if the Fed waits 6 more weeks to cut, but also no real reason to hold off. Fed Waller says disagreement over monetary policy shows a healthy debate. Fed Waller says, I don't think I could be any clearer on rate position. Waller says if immigration were a big factor, you'd see shortages. And he says that business executives say they are not hiring or firing. It says here the US administration is now looking at a reciprocal tariff rate that exceeds 10% even if a deal is reached. What Trump is really doing here, Trump is a fisher, okay, for the markets, right? He throws out headlines, he throws out numbers to see how markets respond to it, specifically to see how the bond market responds to numbers. What I'll tell you is the bond market is not reacting negatively to these headlines. As I'm literally looking at it right now, TLT, virtually unreactive to any of these comments of 15 to 20% EU tariffs. Bond market doesn't care at all. That means Trump kind of has a green light to continue with this rhetoric, continue down the, higher tariff path. Now, that is going to do it for this video, ladies and gentlemen. We have a lot to cover in the next video as well, so stay tuned to the channel for that one. At the time of wrapping up this video, Tesla stock is up 2.34% today, and really at a critical level. I think the stock is going to explode higher from here. But, Monday and Tuesday, right before earnings, I wouldn't be surprised if there's not a lot of, movement in the next 2 days. But it's really after earnings that I'm expecting probably a 20% rally. And that can happen from time to time. That actually happened after the, earnings on October 23rd, 2024, the next day, Tesla stock was up 22%. Wouldn't be surprised if we have some kind of similar reaction. We'll talk about that more again in the next video. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the trading community. With that said, have a great rest of your day, and I will see you in the next one.